December has kicked off on a cheery note, and now we're awaiting the Santa Claus rally, aren't we?
Santa's come early this year. It's supposed to come in December, and that's why it's called Santa rally. I think Santa's come early in December this time. Maybe it's global warming which is affecting Santa also. It's not been bad at all. Frankly, the market action has not been bad at all. There's a marked improvement in flows. There is a marked improvement in market momentum, and there's a marked improvement in market participation. So from where we were, let's say 10 days ago, when only there was bad news which was thrown at the market, I think this market has done reasonably well. You have to look at the market in the context of what is happening in the world and versus where the local news flow is. Locally, we've not really got anything which could be called as motivating or something which could really add a, which could be very strong in terms of an economic indicator. The GDP data was strong. Inflation fears are a real deal. Adani sell-off broke the back of the market. Global cues, dollar is against us, and foreign institutional investors, they continue to sell. Auto sales, again, not impressive. So despite so much of negative news which has been thrown at the market in the last couple of days, I think markets have done reasonably well. And that is a clear sign that markets in the near term, they're finding a support. The desire to buy is coming back. The outperformance in small and mid-cap stocks is a real deal. And this is a typical sign that when pessimism is extremely high, that's the time when markets, they typically bottom out. So a classic buy the fear cycle, I think, has played out again.
Yeah, that has played out, but at least for what it's worth, we have seen quite a bit of recovery from the lows that we had seen just in the month of October and November. So the last couple of weeks have been a tad bit better for the bulls. But if you look at the cues coming in from Dalal Street yesterday as well, the market ignored that GDP print, which looked very weak, and talked about how consumption is slowing down because we managed to advance for the second session. We're above the 20-day moving average for the sixth session. The broad indices also actually did okay. It was Bank Nifty that was underperforming for large part of the trading session, but in the last 1 hour we did see a bit of a catch up as far as Bank Nifty is concerned and managed to end near the 50-day moving average as far as Bank Nifty is concerned. Real estate stocks were doing well. There was quite a bit of cementing of gains when it comes to the cement sector yesterday, so we were watching out for a couple of that those sectors. And pharma also managed to do quite well. A couple of news flow around Cipla and Biocon kept those stocks active in the trading session yesterday. But really, it's about how the broader markets have come back to the participation. Nikunj, we were talking about how large caps, of course, select large caps had seen the outflows as well from the FIIs, and it's how overall in the scheme of large cap versus mid cap, it's large caps which are better placed. But do you think the mid caps, with the kind of performance that we have seen of the broader markets, the rally in the small cap and mid cap is not done with yet?
Anisha, if you'll recall, we had turned bullish on the market, and we started using the phrase that I'm ready to stick my neck out and I'm ready to call out for a December rally. And I think the reason why there is case for small and mid cap stocks to march higher is largely because of this entire zone where markets have become extremely oversold, and from there markets are bouncing back. I see the month of December being differentiated in terms of the profile of mid and small cap stocks. I don't expect a very strong rising tide phenomenon, but within the small and the mid cap stocks, I think you will see differentiation. For example, PSUs will do well, but not every PSU will do well. PSU banks will do well, and PSU power stocks will do well. Similarly, large caps will do well, but within that, I think banks, both PSU large banks and private large banks, I think they are the ones which could do well. There is a trade coming in some of the capex related stocks, whether it is L&T or whether it is ABB or Siemens, because markets are working with an assumption that now government spending will pick up. So these are the 2 or 3 large pockets of trade. One is financials, second is government capex related themes. Within that, it could be infrastructure, it could be road, it really could be something to do with power. Barring that, to make a case that everything in the large cap and mid cap space will come back, Anisha, I think is difficult. See, there was a tactical trade in the market 10 days ago, which is that oversold stocks have neutralized. They've reached neutral territory. Then there is a second trade in the market where what is the theme in the run up to the budget, government will spend more. So capex, cement, we've seen evidence of that, that seems to be making a comeback. The third trade in the market I think is large cap financials, where a stock like HDFC Bank has hit a lifetime high. That's the third trade in the market. Barring that, to make a case that everything is going to be going up the way it did post May and June, I think that's difficult. I also feel that railways and defense stocks are likely to underperform in this rally, which I think is empirically evident in the way how things are moving. Auto is very difficult to make a case that why should they outperform in this rally looking at the dispatch numbers. Similarly, it's a very difficult case to make that why should FMCG stocks outperform in this rally. So not everything in the market is great, not everything in the market is bad, but I think it's now time, we are going through that phase of the market where the household conditions have neutralized, and it's time to be very, very choosy in terms of what you want to buy and where you want to chase momentum.
Okay, be picky and choosy in this market. While we've recovered nicely from those October lows, we're not quite out of the woods yet. A lot more broader participation definitely needs to happen. But
if you like this video, then like, share and subscribe to ET Now.